There we go. And now I'm going to hand the headset over to Tom Williams. Tom.
Yeah, hi everybody. Tom Williams here. Lovely to talk to you. It's supposed to be the first day of spring, but they haven't turned the heating on yet. It's still freezing cold out there. But there you are. You know, we got all the heaters on, windows shut, doors closed, so we're quite snug and warm here. And I've got Rita here with me. She's quite a wizard at computers and everything, which is a great help to me. Peter, the husband, is busy trading apparently. He's in a trade and he's at home, which is a couple of miles away from here. But as far as, is it Gary Dayton?
Yes.
We tend to be an island on our own here. In other words, we try to be as reliable as possible. I know the internet let us down last week or the week before for some reason or other when they're messing around with the cables. God knows what they're up to, you know, but it just doesn't work. But we tend to be an island on our own. We do our thing, and we're happy to answer any questions. And even if you type in questions to go into the VSA club, I'm certainly quite happy, and Rita, to answer anything we can. Anyway, nice to talk to you. I'm talking to you from Worthing, which is a little holiday resort town on the south coast of England. We're quite near the beach here, but it's far too cold to obviously get anywhere down there. But now, the chart up on the screen. As you know, I always like to look at the end of day, the S&P 500 cash market, because this is a very important index, because this is where the equity lies. If this does well, everything else does well. This is where the equity lies, which is important. Watch, this drives the market here, this equity market, and everything runs on the back of this. So we look at the end of day to start with to get some idea what we hope to, or what we're going to expect possibly on tomorrow. Now this is a daily chart, end of day, and it's only up to date for Thursday. So Friday's action is not on this chart. But, okay, I can't remember exactly what we said about the market, but I remember saying something up here. I remember saying this looks like a top reversal, which is a sign of weakness, right? Falls. Here, I remember this, went up, look, on no demand. Look at that low volume. And look how they've closed it on the high to cover up that no demand as much as possible, to mislead you as much as possible. I think we noted that when it happened. Now this one here is a crafty bar, look. Whenever you see a bar like this, right, there is a slight increase in volume. And again, it closed slap bang on the low, which is their effort to convince you that this market's going to collapse. But I'm always suspect of these bars that have this, what we call a top tail, look. Right? But the volume has decreased. And that bar there is down because of this is no demand. Right? However, next bar here, look, is up. There's not a lot of volume there, but it's not low volume as we know it. But this one we noted, I think, last week. It has gone up, look, and there is no demand. There's the low volume, look. The computer colors it pink automatically to let you know that that, relatively speaking, is low volume. Okay, and then this was yesterday. That it was Wednesday, look. Okay, and this, when you see these bars like this is a weak looking bar, right? It attempted to go up. It closed near the low, and there's not a lot of volume there. It's still not low, it's not high, it's just sort of messing around in the middle, look, average. So, but those sort of bars look weak when you see those bars. And it's going to take a great deal of effort to push up through this top reversal here. Okay. Take a lot of effort to go up there. Right, so what are we looking for here? The market looks, to me, it looks weak. Right, but whatever you think the market's going to do, don't be surprised if it doesn't do the opposite, because you can't help picking up all the vibes, all the news, everything people say about the market, and you can form a gut feeling on that information that may not necessarily be accurate. So you have to be very, very cautious. As I always say in the past, don't trust anybody in the stock market, and you can't even trust yourself. And that's because you can form an opinion, right, which could easily be wrong. And that opinion is formed through receiving information that's not totally accurate. And it infers something isn't. Right, now Rita is going to put up a 20-minute chart of today's action. Is that 20 minutes?
Correct.
Yeah, correct. Now, please, if you've got any questions about anything at all, anything I'm talking about, or anything you can visualize, please type it in. And Rita's here looking at the screen, and she will relay the information to me, and we'll try to solve any problem here. Okay, so this is a 20-minute chart, and down the bottom here, I think this is when the market opened, look, we've got some potential stopping volume, right? And then we've got next bar is another signal, look.
2-bar reversal.
Ah, yeah, 2-bar reversal. So in other words, that's a bottom reversal. Now, please read these dialog boxes carefully, because we, as I keep saying, we don't hold information back from you, except for the KG chart. I must admit that was held back a bit. But Philip Frister re-edited all these very skillfully. And so read all these very, very carefully. And because these things repeat themselves endlessly. And what you look at now, that'll occur in your lifetime hundreds of times in the future, because this is how the markets work, right? And you will be very pleased with your analysis, I can assure you. Okay, so we've got signs of strength here, 20-minute chart, the market goes up on this, lo and behold, it hits no demand up here.
Yep, no demand.
No demand. Now, there again, look, read the dialog boxes. Sorry, I can't see very well, so that's it, look. Because no demand appears endlessly, and this is how the market works. So at least you'll have a terrific insight into what's going on that no demand, and knocks the market sideways, look. Although there's no signal on that particular bar, look, there's a crafty little up thrust there to try to catch stops and mislead you. Falls, a couple of bars, right, and then another little sign of strength appears.
Basic test.
Basic test. A basic test is a down bar, a red down bar, closing near the high, usually the spread is narrow and the volume is low, relatively speaking, that is. On that test, the market goes up, look, quite a fairly healthy looking widespread up, but bang, it's hit no demand by the look of it. Can you click on that box? Now the reason why there's no demand, look. So that's warning. It's a warning shot over your bows, that one, because it won't come up with an arrow, and you've got to wait till the next bar actually closes, and has to be down. Then a red arrow will appear, reminding you that that is potentially no demand. And so you would then, don't forget, we look at the daily chart, and it looked weak, didn't it? Not weak enough perhaps to launch us into a bear move. It just means lower prices. And you could see the professional money coming and going with their activity in the chart. Any questions, Rita?
Any reason why it's a 20-minute chart? Yes, Steve wants to know any reason why you've picked a 20-minute chart.
No. Give me a number and I'll pick any chart you want. There's no specific reason. I've got to look at some sort of chart. But most of these time frames will throw up all sorts of information for you.
Yep, we've got a question here. Is there supply in this 1500 bar here? This one here, Tom. Is there supply there?
Well, the sudden high volume or increased volume, look, on that bar there.
Yes.
There's definitely some supply there. Now, what's interesting is that there is supply there, definitely. There's an increase in volume, right, it's closed in the middle. However, this is powerful shakeout behind you, right? This is quite powerful. And that's what we would call absorption volume. In other words, people that were sitting along this high here, there'd be thousands of traders would have traded something there, right? And then when the market goes back up there, they were very nervous when it went down here. And a lot of them would say, right, I want to get my money back, so I'm going to do something here. And this high activity and volume is them doing it. And the professional money, if it market's bullish, saying, right, okay, I'll have that lot, or I'll have those. Now, there's one other thing. You see, it's very important that these trading areas to the left, right, and that's a typical example. There is supply, but it's not bearish supply because it could be absorption volume. Now, what's interesting is, look here, if I draw a line, or say through there, look, through that bar, which you want to know where the supply there, right, it could easily be tested at some time. And lo and behold, as the market goes sideways, there's the test, look. There it is there, look. And that's testing that high volume or high activity. Professional money want to know, right, if most of that selling has disappeared or activity. Because the big danger to professional money who's got a position there is that when they mark it up, right, other traders are going to dump their holdings on them. And that's an easy way for them to lose money. And that's why they do this testing, look. So right on that bar, look, there is a test.
Basic test, yes.
Basic test, look. And that's why tested there, because of this. Now you see that more or less going on. It may not look exactly like this. I think I described it last week or the week before like a housewife cooking, making a cake. They're so good at it and so familiar with it. They say, oh, it's supposed to have 2 ounces of this and ounce of that and all this stuff, right? But they know it so well, they can pick a handful up, or they know exactly what 2 ounces is, or very close, and they feel that what they're doing is right because they've done it before so often. And I think that's what you need to look at in these charts as well. Don't expect everything to be the same, because we don't look at formulas. Nothing will look the same. I also describe it as looking at a tree from a distance. In the summer, right, you've got all those leaves on there, and all you can really see is green foliage. And as far as you're concerned, from a distance, all those leaves are the same. But you know they're a leaves. But if you go up and study the leaves closely, none of them are the same. They're all different sizes, different shapes, all sorts of things. And this is what happens in the market. Don't expect everything to be the same. Like your fingerprints. Don't expect all the moves to be the same. The basic principle will be the same. And that's a good example there of what we call absorption volume. Right? Now, why do we think it's absorption? Because first of all, you've got this sign of strength right behind you. Right? That's like a springboard. That's a good shot to drive you up, look. And as you go up, you've got this top to you here to the left. And that top will contain thousands of traders that have entered positions there. They may even be long, some of them, but they panic when this thing drops like this. And when it reverses, oh, I don't like this, I'm getting out.
There's a question on that, Tom.
Yeah.
Shall I just say, sorry to interrupt, but it's the optimum time to mention it. Krista says, doesn't the close need to be above the range it breaks out from when it's absorption?
Not necessarily. As I was saying, the housewife who cooks the cake doesn't have to be exactly 2 ounces or 3 ounces. But as a professional cook or a skilled housewife, you know instinctively what is right and what isn't right. And here, we don't go by patterns, not patterns as such. You know, we don't use, I think I used to call it the Dow theory, you know, head and shoulder, all this nonsense, you know. But the same thing with absorption volume. All you know is that the thing's obviously been marked up because you've got this strength behind you here, look. You've got these 2 arrows telling you there's strength here. It's marked up, look. The volume is high, so you know there's supply there. But you don't get worried if you're bullish because you've got this right behind you and you know you've got this top here to the left. And there'd be thousands of traders all along there somewhere. And they're very nervous when you get these shakeouts like this or these testing. So don't nail yourself down to specific things like that. You should recognize that as what it is. Okay, now, I told you though, marked up on that, but you've got another no demand sign there. And lo and behold, it comes back down and tests that area, look. That level, I should say.
There's a question on that particular bar as well, Tom.
What, this one?
Yeah.
Yeah.
Edmund, tell me if I'm wrong, but I'm assuming this is the bar you're talking about. Why would that be a test bar? It is about average volume and increases from the previous volume bar.
Sorry, say again?
Why would that be a test bar? Because it's about average volume, and this volume is an increase on the previous bar.
Yeah, again, you're almost getting down to the realms of a mathematical formula. We don't use formulas. We don't use patterns. I mean, you know that there was supply here, right? And you would be expecting a test of some sort. That's what normally happens. You know the supply there because they've got the high activity look as it pushes up. You know that's absorption volume because you've got this shakeout right behind you, look. There. Right? So you would be expecting a test sometime. And then that looks like a test. A test is a red down bar, usually a narrow spread, closing near the high or the middle. But the main criteria is the volume is low. And in fact, the computer's picked that up. Right, now you're looking at a dumb computer here. Your brain is far, far superior. The only thing is a computer, it follows instructions. It remembers what you tell it because you've written it in a code. Right, and it says, oh, well, you said this was a test. Okay, so I'm throwing an arrow up. And it's as simple as that. And you can do the same thing. Don't try to complicate it. Don't try to say, oh, well, the high, the close has to be here, or this or that. You're just making hard work for yourself. That is a test. And if you don't believe me, go back and check them in any chart you want to look at. Right? I mean, somebody said, why am I looking at 20 minutes? Well, I can look at any time frame. Put up 5 minutes, for example. Now there's a 5 minute look. All right. Right, so there you are. That red arrow, I've told you this many times in the past seminars. Whenever you see a red arrow appear as the market's moving up like that, right? What's it say?
No demand.
No demand. Okay, so that means the volume is low. Now, if on the very next bar you see a test, now a test is a red down bar, narrow spread, and the volume is low relative to the previous volumes. In fact, very low here. Now, this hasn't thrown a signal up on this particular chart, but you should be well informed or well aware of that. That's a very strong indication of higher prices if you're a scalper. Right, it's a 5 minute chart, so up it goes. And it hits some sort of, looks like no demand up here. And it's just drifting sideways. But all these different time frames will give you all sorts of information. Put up, say, a 30 minute. Right, this is a 30 minute chart. Now there's your shakeout on the low. This is the area here, look, where traders would have gone in, right? And then when this plummets down here like this, they are alarmed. In other words, they get scared. And they think, ooh, looks as if I'm wrong here, especially if they've gone long. And then so when it's marked up like this, right, now there's a signal on this one too.
2-bar reversal.
2-bar reversal, which it is, more or less. Right, and the volume again is high. Right, so it's absorbing. But remember, don't be alarmed at that high volume as it pushes up through there, because this here, it's a shakeout, look. Although a computer calls it a test, which it is. but still a form of shakeout. And up it goes on that. Now there's a signal there. It looks like no demand.
Supply coming in.
Oh, supply coming in. Right, fair enough. Okay, so there's some supply present. But,
the next bar,
that looks like a test, you see. Now you won't necessarily get a signal on everything. So I just haven't had the opportunity with a programmer to look at everything. Right, up it goes, but it looks as if it's going up on no demand at the moment, and it will have great difficulty going up through this area, especially on no demand. So you can look at all these different time frames. Now, is that clear?
there's questions on the 20-minute chart.
Right,
Just now.
put 20-minute up. Right, there's 20 back.
Back to the 20-minute because there's just a few questions on. Colin asks, Tom, where would your entry be on this chart? Would you get some of the first leg up, or would you wait for the test?
Well, you see, there's no hard and fast rules here. Once you learn to read the chart and you see a sign of strength, then I'm afraid your skill as a trader has to kick in. And people like Rita here, she'll tell you, because when she arrived here only a year or two ago, right, she knew absolutely nothing about the market, absolutely nothing. And now she makes several $100s every now and again, and Peter does as well. And they will be making a lot more, because once they get their full act together, shall we say, then they will be trading more contracts. But they're following their advice I've always given them. Don't trade unless you actually see a principle appear. And as soon as you see something appear on the chart that say looks like strength, then it's up to you. You can't help it. Your skill as a trader kicks in. But there's no hard and fast rule, because you'll never trade if you follow hard and fast rules, because everything always looks just slightly different. I mean, to me, that's screaming out loud. That's a test look. Couldn't possibly miss that, especially with this pushing up through supply right here. Look. Now we know they're pushing up through supply because of this shakeout right behind you. It's like winning the lottery, putting all the lottery money in the bank. Then next day you buy a car and somebody says, "Ooh, I wonder if that's they've got money now." Of course they've got money. They won the lottery. And that's so obvious there, look. Now, if you draw a line through there, look. How convenient, look. The market goes up on that. Bit of no demand. Couple of 3 red bars. But that is a test. I mean, you can't. It looks like a test. It doesn't look like anything else at all. And look at the background. The background's telling you, look, you've got absorption volume here, and you know it's absorption volume because this is a shakeout. I think even Wyckoff, those that took the SMI course, I think they call that a springboard. Now, I never use those sort of terms, although there's nothing wrong with that. They call that a springboard. In other words, jump down and off you go. That gives you the impetus to go up, look. I usually like to call a spade, all these sort of fancy words I'm not all that keen on, or it doesn't come naturally to me. That's a shakeout. That's absorption volume, look. It went up. They like to test. There's a test. and on that test it's gone up somewhat, but it's meeting no demand up here, look. So you wouldn't go rushing in at the moment. Don't forget it's Friday, and they will do their utmost and best to wrong foot you on a Friday. Don't forget, whatever happens today in the market, right, newspapers, television, money programs all get hold of it because they have to have something to talk about. And remember, you know more than they do. I mean, I've listened to those programs, and they can't really analyze the market properly. They tell stories and this and that and all the rest of it, but they don't actually tell you how to read the market. But right, so you've got to be careful. But this is no demand at the moment, and I certainly wouldn't want to go long right now. Right, but you can see these. You can see that's a shakeout. You can see that's absorption volume, and you can clearly see that's a test. And the blue bars means it's trending up. It's hit no demand right there. Any questions?
Yep, Carlos, can you show us more bars? That trend line is only good for a few bars, I think, if you look at more bars to the left. We haven't really got a trend line up, have we, Tom?
No, but okay, you can draw a trend line. Put more bars up.
How many bars do you want? This is 50.
That's 50?
Yeah, do you want, it's about 80, 90, 100. I mean, there's...
See, normally you draw a trend line from there to there and there. And now it's trying to push up through that. It's overboard.
Tom's just saying normally you'd put trend line from there to there. Now it's pushing up through here now because of the support, which means it's overbought.
And that's why it's probably running out of steam.
Which is why it's probably running out of steam. Tom, there is a question. Well, hang on. What? From where? There. Okay, hang on. Alright, to there.
Yeah.
That's it.
No, that's the only,
Hang on, shall I just...
See, that'd be a guide for you. It's not a very long trend line, because there isn't one there. They always say, don't trade in the middle of a trading range. You should try to do your trading or concentrate on your analysis when it's near the low bottom trend line or the high. But you could draw a trend line like that, but it appears to be running out of steam at the moment. Don't forget, the daily chart had weakness in it. It's fascinating analysing these charts. I would love it. I usually love to draw trend lines. But don't forget to analyse a daily chart to give you an overall picture. Be careful about absorbing wrong information or misleading information. You see, the trouble is, when at the right spot to trade, like say down here, look, the problem is, are you ready for that? Because you've seen all this weakness in the background. You're not exactly all that bullish in your mind, are you? But when that suddenly appears, and you can clearly see it's a bullish shakeout, are you geared up mentally to jump in and trade there? or even here if you're scalping, you know there's going to be normally there's a test of some sort. Now I say of some sort because it can be lower, higher, but it's usually at the level where supply was previously seen. Are you mentally ready to leap into action and trade? And that's why I usually say your skill as a trader has to kick in. If you're nervous about scalping the market like this, the odds will heavily be in your favor if you analyze it along these lines I'm telling you. Your best bet is to trade stocks and shares, acting stronger or weaker than the index. So again, you see, it's your skill as a trader decides what you're going to trade, or you may want to trade options. We've got lots of people making money with options. Now, the thing with options is the ones that seem to make money are the ones that don't stay in very long. They're only in there for 2, 3, 4 days at the most, and they're out. Because options, don't forget, are written by skilled traders, and they're not there for your benefit, I can assure you.
This is the last question on this chart, because I am aware there are questions about other charts we've got waiting. So Krista asks, Tom, if the next, you're talking about this, a breakout, so you're talking about this absorption volume and breaking out. Krista asks, if the next bar after the breakout goes back into the range, would that be a sign of weakness, even though you have strength in the background?
They do that sometimes. If the market is very strong, bullish-wise, and you see them going up with absorption volumes, if they test fairly quickly, it means they are definitely bullish in their mind. But again, you've got to look at the volume. If it goes down and the volume is low relative to the previous volume, right, and it closes in the middle or high, that's a test. And that means they've tested the absorption volume. And that means that there's no supply, and that means that's going up. And then you let it run until you see some weakness appear. Now, of course, we are talking about scalping. But as your skill at reading these charts strengthen, you may not want to scalp. You may want to do something else. But we can't tell people when to buy and when to sell. It'd be a nightmare for us. Absolute nightmare. Besides, it's against the law.
See if something comes up here. I shouldn't sound surprised, but okay, Peter, is this the chart that you're talking about, LVS daily? I've just typed it in the, in the box. Right. Right, what's this day here? Right. Yes, okay. Question on this chart, Tom. On the 25th of Feb, which is that there, yeah. I noticed a lot of trap up moves on blue chip stocks. Would you please comment on the activity of that day? LVS. What stock is it? What's it called, Peter? Tom's just asking. Las Vegas Sands, Tom. Las Vegas Sands. Yeah. Comment on the activity.
Well,
Casino.
a casino. Oh, I bet they love to gamble. Funny, I laugh when Rita, her terminology somewhere, she says, "Oh, put your chart, see if anything comes up." Whoops. Wonderful. Anyway, no, there's obviously, if this is a casino, but they'll be trading exactly the same as any others. They're out for a profit. They're out to mislead as many people as possible. They're obviously gunning here for stops. This is an up thrust look.
Yes.
Up thrust look. Right, okay. So that triggers off stops, misleads many people. Those that happen to be short here, right, really panic and have to cover, and so on and so on. On saying that, though, it has up thrust on low volume, look. So there's not a lot of supply there. So market on that. More or less goes sideways, look. And now this one's going up. It doesn't look very healthy at all. This looks as if it's going to go sideways or fall. But you really need to look at what's happening in the background. Oh, there's the supply there, look. That's why this market's fallen, look. There it is. Markets do not like ultra high volume on up bars. Now I know you might say, why isn't that absorption volume? Because it looks something like the chart before, doesn't it? You've got a shakeout here, look. Right. Mine is ultra high volume. But the giveaway here, I think, is the next bar is also up. Appears to be up on no demand. Plus, you've got clear no demand here. Right. This is where the professional money have seen all this. They know exactly what's going on.
No demand.
No demand. Right. So up it goes, no demand. So once you see that, you clearly know that this here is bearish volume. Now it's not tested, look, like that chart we were previously looking at. This is a markup, no demand. A test is when it falls on a narrow spread. Right, red bar closing near the middle or high, volume is clearly low. Now here's another blue bar. It has to be up on no demand. There's no signal on there. Look at that low volume. Look. So that's why it's fallen. And here's a nice little up thrust, look. The computer hasn't picked that up, not on this time frame. But you've got weakness, weakness, weakness. Right? Look, they must be holding the market up. And then they have a nice little up thrust. They can't hold it up much longer. Triggers off stops, misleads many traders, and then it allows to fall fast, usually fast as possible. This is whipsawing here. This is not a healthy looking chart. And there's no a little bit there, look. A little bit, well, there is a little bit of stopping volume there, look. Plummeted down on narrow spread. There is definitely an increase in volume. That's why they had to go at this. That's why it's actually gone up a little bit. But even if it was bullish, you'd expect this here to be tested at some time. I suppose you might call that a test. There's a green arrow here.
It says test after up thrust.
Yeah, well, there's the up thrust.
Yeah.
So that's why it's gone up a couple of bars. But you treat this chart with great caution. Right? You wouldn't jump in and go long or even short at the moment. You want more evidence. And the evidence will be mainly they need to test this area here. It's plummeted down, look. It's gapped down, narrow spread. There is a slight increase in volume, nothing much, too much. Right. We do have a test though here by the look of it. Right, so you would not go long unless this market fell back down to this level and there was a clear test or even a springboard or shakeout. Then you can go long if it's bullish. If you've got weakness now in the form of no demand up bars, then you wouldn't go long. But you'll get your head around it all. Look at gold.
Well, there's a question here from someone who's been waiting. Oh. GRPN. Okay, don't worry, I'm going over here. G. Right. Oh. Stroke. Is this now to Alan? You asked us to look at GRPN. I assume this is the one. Groupon, it's called, Tom. Groupon. Can you look at this and give us your view on what one can expect next? Oh, you wanted an hourly. I don't. We can't get it. We can't get intraday charts on stocks, I'm afraid. Tom can't. He can get daily, but not intraday. So okay, take the daily. All right then. So what can we expect next week, he says? Should we look for a test or no supply on low volume?
No, I was just about to see that. Well, the reason why it gapped down like that is hellishly weak, isn't it? You wouldn't say now, oh, I'm going to look for a test, right? Because what you usually get, I mean, first of all, you've got this weakness up here, so you were forewarned, right? And then, of course, this is an upthrust to mislead as many people as possible just before the fall, right? So it's plummeted down. The volume is very high, close to the middle. So there must be some buying in there. However, when you get these gap downs like this is not a shakeout. This is too much of it. What happens is you may get a rebound and it may drift up a little bit for the next week or so. But this is a bearish looking chart. Whenever you see these gap downs like this, there's something radically wrong somewhere. And you would not consider going long. But on saying that, this could easily have a bouncing effect. You do get bouncing effects in the market where this could drift up, especially if the index showed any sort of strength. But that is best to leave those alone and wait until all this sorts itself out from a practical point of view as a trader. Otherwise, you'll just pressurize yourself. But there is weakness all up here, look. All right, you've got all these signs of weakness here, look, several of them. All right. Even there's something.
Supply coming in.
Supply, look. And right, okay. So you've got all these multiple signs of weakness here, look. You know, yellow boxes, look. All says supply or no demand. Market drifts off and then bang, they have this upthrust. What's that say? Click on that. It's got to say upthrust.
It's saying supply coming in.
Yeah, supply. Well, it's an upthrust. Well, it may very well coincide with bad news. I mean, that's what they do. They wait for the bad news and then blame the bad news. It's not the news. It's the professional money whipsawing the market around on the news to better their own accounts and try to destroy your trading.
Yes, I think I saw on the internet somewhere some bad news about, or negative news about, Groupon. But I don't know when that was, what date that was, but it would be interesting to do a little bit of research to see if it was after this. You know, did the professional money know what was going to happen? But yeah, I'm sure I did hear something negative about Groupon somewhere. So John, Oh, Mark says the CEO was fired yesterday. Tom, sorry, we shouldn't laugh. That's not very nice for him. But anyway, okay. John, so CL is a stock. We can't get a intraday chart for that, I'm afraid. Sorry. Gavin can, if you're listening to Gavin later on. Now, Mark is asking a question here that my brain is now seizing up, but I will read it to you, Tom, so you might be able to answer. Yeah, because my brain has worked out it suspects it's too mathematical for my brain, you see, Tom, so it seizes up. The North American markets open at the half hour, 9:30, and the software on the hour setting would start the clock at 9. And I would think the hour settings would be distorted. Am I wrong to think that? Tom is pondering here. The North American markets open at the half hour, 9:30, and the software on the hour setting would start the clock at 9. And I would think the hour settings would be distorted. Am I wrong to think that? Yeah?
Well, you wouldn't start off with an hour chart, would you? Because the computer's analyzing an hour's chart, an hour's activity. So, it's no good asking the computer to do something that you can't see. It has to have the information to analyze. If you start off trading at 8:30 in the morning, right, you'd obviously be using at least a 5-minute, or the most a 5-minute. You're no good putting an hour up because the hour hasn't happened. It's sort of clairvoyant stuff, isn't it? If you want to know what you're going to do exactly tomorrow, you don't really know. You can have a quick guess at it, yes, but you don't really know because tomorrow hasn't arrived. Sorry, does that make sense? No.
Okay. Moving on. Fiona. Tom mentioned housewives. Yes. Tom likes housewives, don't you, Tom? Oh, yes, he does. Not just housewives, Fiona. Yes, but housewives look after you as well, so he likes that. So, yeah, your powers of deduction are very good, Fiona. Right. Thank you, Thomas. Now, one here from Chris. What are your views, Tom, on staying in the market overnight? You're a day trader. What are your reasons for day trading rather than being a swing trader?
Well, again, as you learn to read these charts, again, your skill as a trader has to kick in. I mean, sometimes you see end-of-day chart where the signal's so obvious that you can trade overnight. I mean, sometimes you definitely look at it, oh my, that's definitely going to come off. There's no question about it. But until you see that, you want to don't trade overnight. Many of the professionals don't. Like over the weekend, they won't go home tonight, Friday, with any position at all. They come down to that line, yeah.
Yeah, I've just flipped over.
Yeah, so we can't tell you, when to buy, when to sell, because there's too many factors involved here, far too many. And you wouldn't want that anyway. You want to learn how to do it yourself. You don't want to rely on us here telling you at all. I wouldn't have thought so. But if you follow what we're telling you and get to read these charts, and it may be very confusing at first, but if you keep plugging away at it, it will suddenly emerge and you'll see it. I've had people ring me up in the past, say, you know, Tom, I was taking a bath, I was relaxing there, suddenly I realised I saw it all. Yeah, honestly, I've had that. I've had all sorts of things. Yes, it took 2 years or a year, and then suddenly I saw it all, you know, and they were very happy. But I mean, look at Rita here. You know, she's very quiet about it, but she's an excellent trader.
There are no more questions here, Tom. We've got a few minutes. Do you want to look at gold then?
Yeah.
We'll just look at gold before we and finish. And also, John says, Tom, thank you so much for all of your trading wisdom. He appreciates it very much. Thank you, John. What am I doing? I'm going over here, I think. I'm going to, we'll go to that continuous.
Yeah, down the bottom there somewhere.
Oh, cool. Well, there's your bigger picture. It's you want that, just that, yeah? I can change it.
Of course, Gavin mentioned this chart only this morning. He spoke to me on the phone. And the reason why he's delighted, he's apparently been short most of this trip down here. And he's very happy. Incidentally, he's going to Poland next week. I think it's next week or the week after. So I said, well, at least it'll be a bit warmer, because Poland can be a hell of a cold place. But there's 400 or 500 people waiting to listen to him. That's wonderful. But gold, anyway, look how these trend lines work. First two highs, first low. And this is what gives you, these trend lines are very important when the data reaches them. Okay, now it looks obviously like there's some support or buying here. Down the low here, you are now severely oversold. Right? So you're oversold. So there are traders that trade on that. They come in and buy. Look, there's the high activity. So you quite expect this to drift up. It's in a downtrend. But if you study these signals on this, now I know you've got a green arrow here, which in hindsight doesn't look all that hot. There.
That's it. No supply or a test.
No supply or test. But on that look, it's a daily chart, it drifted. But I can assure you, I know, without looking at it, there has to be no demand in there somewhere for that to fall off like that.
That's a low volume.
Is it?
Yeah, and then go to a long, and that's definitely a no demand as well.
Well, there's no demand, so that's why it's come off like that. So no demand is very, very important. Now, unfortunately, I don't have intraday charts. Gavin does, I know. That's probably why he likes to trade this. But if you look at the intraday chart of some of those up moves, you'll see they're topped out, usually with no demand. But that's gold. Now, we'll be doing our newsletter tomorrow.
Yes.
And I think Rita and Peter are personally going to put a chart up. And we look forward to that. I'll be looking at my charts. As you know, I do, in a way, like to stick my neck out by analyzing the live edge of the market. Most of the time it's right. Occasionally well, I don't make a serious mistake, because sometimes it may go against you for a little bit, but eventually it kicks in. But we'll be doing that, and please, any questions, you can ask them right now or put them on the VSA club. We'll certainly do our best to answer them for you. So I'll put you out, Delia. Thank you very much for listening.
Right. Okay, so that'll be us for today, and we'll, as Tom said, newsletter tomorrow, and we will see you same time, same place, next Friday. Thanks everybody, and have a great weekend and a great week. Thank you. Bye-bye.